The first thing we do is, before we get into trading any session, whether it is the New York session or the whatever session you're going to trade, is you want a general look of what happened in the market in the prior session. We also know if there is any news coming in so that we can be cognizant of these news events before we get, because trading the news is one style of trading, and trading the market in general is a different style. You cannot mix and match the different styles of trading. So looking at the market, and then what we're going to do is that we're going to choose from what happened in some of the currencies that we're going to trade. So the first thing we look at, I want to look at what currencies has given me what we call a reversal in the prior session. So for example, the dollar CAD, you see here I have a strong reversal. This means that the market has been going in one direction, it has turned around, and it is now giving me a strong reversal. These strong reversals are quite a strong setup that we need to be looking at, because they usually get some follow through in the following session. You're reading at I'm showing you now how we find the reversals, and then I'm going to put the charts. So I also see that the pound CAD had as a reversal. The pound dollar also had a reversal. See here, this is the London session. The market basically has been moving in a sideways session. So there is a whole four recordings drawn on the FXStreet about price behavior. But what we have right now is London session. The market is kind of moving sideways. But looking at this chart, my bias is to be long the dollar yen, and to be long the dollar Swiss, and to be long the dollar CAD. And the reason I'm saying that, right there on the pound dollar, we had a reversal. On the pound Swiss, I also had a reversal. So I have two kind of weaknesses in the pound. I also want to take a look at the pound yen. If you look at the pound yen, again, the move is to the upside, and in London, the market also has reversed. So we're getting a general weakness in the pound as a whole. So this way, I'm going to put the pound group together to set myself to be trading the New York session rather than the European session now. So I'm turning the strategies off and setting them all for the New York session. And the reason I do that, again, the first thing in the morning was the pound yen and the pound Swiss. The market is kind of reversing, so I am more inclined to be bearish on the pound, or to be taking the pound on the short side. And I'm waiting for the session to tell me how the market is. I'm going now to go, and if we look at the Aussie dollar, as I said, the Aussie dollar has, again, he's continuing to the upside, then I'm going to join him and benefit. So price behavior, when you talk about price behavior, you're talking about the behavior of the trader. Because the only way that you can see how another trader behaves is how you look at the price action and you decide if the market, if that trader now, how that trader is going to trade. So for example, take a look at the chart in front of you about the Aussie yen. And you can see here, this is the open from New York yesterday. And right here, I'm just showed it to you right here. This is one way of addressing the behavior. We try to look at the chart and first identify a price point where the trader is, as I said, going to be a buyer. So if you see this red line from yesterday, even before the New York session, you will see that the traders over here are already above the prior momentum high. The prices now was above the momentum high, so that is buying coming into the market. This was the London session the market has, and so that we can trade. I don't believe in black boxes. I'm not a big believer of black boxes, because I have seen, like last week when I was in Mexico last week and we were installing this software in some of the banks over there, they have very sophisticated black boxes, and the traders do not know what's happening. They cannot tell why they are buying or why they are selling. All the professional traders are basically nursing a computer program that is taking a buy or a sell signal. But for us, we need to have an understanding why are we buying or why are we selling, because we don't have the buying power that all these banks do have. Plus, we pay a lot of commission in getting into the trade. It's true that they say that there is no commission to buying foreign exchange, but if you're looking at the pip spread, that is your cost and my cost. When you say you're paying two spreads, I mean, I know the brokers will not be happy with what I'm saying, but it's the truth. You pay 2 points or 3 pips, you're looking at $30 in and $30 out. That's quite expensive. I mean, if you go in and you pay 6 pips and you take a trade and you make 20, you have just created a apartment from the broker. He's taking 40% of your gross profit. So we have to be very careful in selecting our trades.